first one is that fintech is there to stay. The Alliance of Technology for Financial Services has been around actually for the last 30 years. Now we talk a lot about it, about those startups trying to enter the process or entering the process like we do, and that is there to stay. Technology is way better understood by younger people like us or at our company than it is at people at banks. That's there to stay. Second, and that's the corollary of the first one, is that banks are also there to stay. They're big, they have customers, they have distribution channels, and as a result, I believe that there will be more and more alliances between banks who don't have necessarily all the talents or the entrepreneurial process to reinvent themselves, and partnerships with fintechs who are more nimble, have the talents, but don't have distribution networks and the products. And so we should expect more and more collaboration between banks and fintechs. And so, the third one, and that's probably more really specific to the robo-advisory industry that we are in at EasyVest, is that it will not be a global play or even a European play. It will be mostly a local play. Just for tax reason, fiscality reason, the service that we give is already very complex to implement in one territory like Belgium. And so I would not expect to see much expansion over the different country border boundaries, but we'll see what happens there.
I think there is a lot of opportunities because everything becomes always more and more digital. So in fintechs, I think there are with open banking also a lot of new opportunities concerning the improvement of existing products or services and even the creation of new one. So I think there are a lot of opportunities to help banks, to help corporates, to help insurance, or even to create new crazy ideas. Yeah.
I don't know how I see the future, at least for my niche, which is the remittance market. I think mobile money will become much more expansive, so more people in sub-Saharan Africa will use mobile money. We'll see more Asian countries also adapting mobile money, I think. So we'll see much more telco subscribers in the next 5 years. I think it's also going to depend on the penetration of internet in big markets. I'll take an example, RDC. One of the problems of the RDC is that they do not have good internet access, so we will see how that changes. And my question will be, hey, is the Bitcoin going to probably disrupt us all, or is it not? Are we going to be in the same problem that, a cultural problem, which is people want to cash out their money, which is what a lot of people want to do once they receive their funds, even if it's through mobile money channels. Now, fintech as a whole, I don't know, but I think remittance, I can't really say. I would bet on mobile money technologies.
When I hear that, two questions jump to my mind. So how can we go from something vertical, silo-based, to something horizontal? And the second is, why does every bank need its own infrastructure? So to me, the answer is to build an ecosystem where every single party is doing what he is good at. I mean, this is Ricardo's law. It dates back from the 19th century. So let's sum it up. I mean, banks are good at trust, compliance, security. They know their customer. They have access to customers. Let them focus and specialize in that. Tech companies, fintech companies, they're good at rapid development, iteration and testing. Let them specialize in that. So I think the challenge for the financial industry in the next 5 years is to be able to connect both, to compress time in terms of go-to-market and build the best of both worlds. And this is our challenge for the next 5 years.